Good afternoon, this is Bob Iaccino coming from the CME Group trading floor in Chicago talking FX. Got to talk about the euro again. Last week we saw the euro break 115 and break out of a sideways channel that it had been in for about 3 or 4 months. Today we broke 114, going down to about 113.94 before rallying. It was a brief break of 114, but then we recovered. It was a break nonetheless, getting down to that low. When you measure out this year's high to this year's low in the euro, that is down 9.5%, puts it just short of an official correction of 10%. We haven't gotten there yet. We could potentially get there considering the pressure that the euro has been under. The Turkish lira situation, contagion risk is starting to grow, at least the idea of the contagion risk to the banking sector of the EU. Overall, that's really pushing global markets, but it's keeping a cap on the euro. The Turkish lira hit a new all-time low versus the US dollar at 7.23, continues to get pressure. There was some strange sort of requirements put in by Erdogan into the Turkish banking system, such as increasing reserve requirements from 7.6 billion lira to 20 billion lira if you wanted to lend out in another currency. Still trying to beg the public to bring their dollars in, to bring their gold in, not working so far. You continue to get that pressure, and the banking contagion that's being talked about is hitting Italian and Spanish banks. Now, we've seen these types of supposed contagions before with Greece twice. With the pigs, Portugal, Italy, Greece, and Spain as one big group, with Cyprus a while back, even going back to the 90s with Russia. And there's always talk of contagion, and somehow it seems to be contained. And that may be why the U.S. equity market didn't do so badly today and why the euro isn't falling precipitously. We actually finished up on the day in the euro by 4/100ths of a point. Open to close versus yesterday's close, or I should say Friday's close, the euro was still negative, but versus its own open, it was actually a green candle, a positive on the chart. So a little bit lower again versus Friday's close, which is probably the more important metric. And lastly, dollar strength. The dollar fell early but recovered very quickly, fell back below 96, which was an important psychological level, and then rallied up and finished very near its highs. The dollar index finished basically flat on the day. It was a very, very big rally and very impressive that the dollar index was under. And again, you look at that as a bit of a flight to quality because the yen and the Swiss were also unusually stable. This is Bob Iaccino talking currency, specifically the euro, from the from the CME Group trading floor, which is in the US in Chicago.